FX Nation, welcome back to ForexU and our advanced course, and welcome back to Market Maker Trap Moves. This is going to be part 2 of the video, guys. So, like we were talking about in part 1, guys, so as we continue to discuss Market Maker Trap Moves, we're going to discuss the trap candle patterns, we're going to continue to discuss dealer structures, and market maker behaviors. All right, so on part 2, let's talk about the M formation. All right. So what is the M formation? All right. What's the definition of it? Simply put, it's an aggressive move by the market maker to set the high of the day or the high of the session. Now, the M formation that we're talking about in this context is, of course, the M formation that would happen, let's say, on a daily basis, right? If we're looking at on a daily basis of a 15-minute chart. Okay, we're not talking about essentially the M formation that is formed, let's say, at a peak formation high or at a peak formation low, right? So we're talking more in context of the 15-minute chart and the high of the day, high of the session, things of that nature. All right, but an aggressive move by the market maker to set the high of the day or the session of the day. Now, let's break this down. So the first leg rise, what does that do? It induces traders to take long positions, right? So if we're having an M formation, the first leg right here, right, goes up, right? And what does that do? It induces traders to take long positions, right? Now, what happens? The center, which is this right here. So this triggers their stops and gets traders to stop and reverse and go shorts, right? So essentially, what happens here is they get them to essentially go long, and then now when they reverse here, okay, it basically triggers their stops, okay, but then it also gets them to go short, okay. And remember that most of the retail traders, right, they are very quick and emotional, and psychologically they can't really handle the actual trading, right? They haven't really put in the work to actually learn and understand the emotional and the psychological aspect of trading. Right, so this is literally what happens to them all the time, right? Is once that first leg is up, they see a big move happening, they get a fear of missing out. What happens? They jump into the trade, right? Now, once they jump into the trade, the market makers move the market back down again. Okay, that typically takes them out of the trade, and now they're like, "Oh man, it's not a long, it's a short." So what do? They place short orders, right? And so what happens now is the second leg rise triggers essentially the stops of the traders that went short. Okay, so all this does, man, this is crazy, because all this psychological and emotional stuff that happens within that M formation, it boggles the majority of regular retail traders. Okay, so a couple more things about this M formation. So the second leg rise can be slightly above the first, but it must close within 30 minutes. So this second leg here that comes up on this M, okay, it's okay if it goes past it, and that's perfectly fine, right? But it has to close within 30 minutes, meaning like it has to come back down, and it can't pass the previous first leg high when it's closed within 30 minutes. So essentially they can play up here for up to 30 minutes or so. Okay, but after 30 minutes, if this is going to be an M formation, they have to come back down within 30 minutes. Okay, if they don't come back down within 30 minutes, this is not going to be an M, and this is not going to be a second leg. You can basically expect market makers to continue to go up higher. Okay, So keep that in mind. If the second leg rise goes above the first leg and it doesn't come back down after 30 minutes, we got a problem, right? And I mean, meaning like the problem is that we don't have an M, right? Market makers are basically going to continue to go up higher. Okay? The second leg rise will only go above the first if there are orders built up above there, right? So if there are a lot of orders here that the market maker sees, right? So basically, let's say some buy stop orders, right? All throughout here. That's why they're going up to get it, right? That's why they're going up to get it. It's basically they want that money. They want to trap all those traders, all the breakout traders, right? They want to trap them, right? So that's why they're going well above the first leg. And really, they really don't go above the first leg. What happens is they open up the spread a lot of times because that's just easier for them to do, okay? All right, so this move triggers the stops of the traders that have taken short positions off the first leg, right? Again, so this position basically takes out the traders that went short, right? Now, also what this does is it grabs any breakout traders that have buy stop pending orders up here, like I just talked about, okay? M formations with 8 bars between the first and the second leg are over 80% accurate, guys. Did you know that? So an M formation that is formed and that has literally 8 bars that make up this metal section here, 8 bars or more, are more than 80% accurate. Think about that. If you can grab M patterns that have 8 bars in between the first and the second leg, you're more than 80% accurate. That's pretty freaking cool. 8 bars, guys. 8 bars between first and second leg. I'm going to show you some examples. All right, and then finally, 15 to 25 pips from the first leg. What does that mean? So what that means is basically from the high of the first leg to the bottom here of this middle part, you want it to be 15 to 25 pips from the first leg here. So this first move down. Ideally, you'd want it to be 15 to 25 pips from the first leg high. Okay? So now you got some very, very specific rules to go off of if you want to find the really high accurate trades. You want to find those second leg M's, look for ones that have 8 bars between the first and second leg, and look for the ones that are at least 15 to 25 pips from the top part of the first leg. Talk about being picky. That's being picky. All right. Now, W formations. Basically, guys, the W formation is the same thing as an M. Okay. It's an aggressive move by the market makers to set the low of the day or low of the session. Same thing. The first leg correction, it basically induces traders to do what? To take shorts. So the center triggers the stops and gets traders basically stopped out and reversed to go long, right? So the first leg right here initially gets traders to go short, right? And then the second part here, the middle part here, automatically takes traders out that went short and now automatically gets traders to go long, right? Fear of loss, okay? And then when we get to the second leg, what happens? The second leg correction triggers the stops of the people that just went long. Ridiculous. So So the second leg correction can be slightly below the first, but it's same thing. It must close back within 30 minutes, right? So this leg, the second leg here, can go down further. That's perfectly fine, but it's got 30 minutes to come back up and close. If it doesn't do that, we're going long. We're going shorter. Basically going to continue to drop. Okay, is what we're going to do. All right. The second leg correction will only go below the first if there are orders that are built there. Again, same philosophy. If there are orders that are here, okay, they're built up here, all right, sell stop orders, right? That's what we talk about next. The move triggers the positions for the sell stops, right? This move triggers the stops of the traders that went long up here off the first leg and grabs any breakout traders that have sell stop orders. W formations with 8 bars between the first and second leg, again, are the same thing, over 80% accurate. Over 80% accurate, guys. That's what you're looking for, 8 bars between first and second leg. Same thing, 15 to 25 pips from the end of this first leg to the middle here. All right, you want this to be ideally 15 to 25 pips. That's what you want it to be. All right, so let's go ahead and let's take a look at some examples. So here's one example here. What do we have? Type 2 pattern, right? First leg, 1, 2, 3, 4, 5, 6, 7, 8, and then we rise. Okay, and then we rise. Here's another one. Here we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, and we rise. Here's another one. First leg, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, we drop. And you can see these drops produce some very nice trades. Second leg, you're still following all the rules, right? Second leg in the box, right timing, right? All that stuff is still matters, still important. Here's another one. Here's one where you had first leg here, and then you had count 1, 2, 3, 4, 5, 6, 7, 8, 9, right? So we had basically second leg coming up here. But what happened? Look, 15, 30 minutes above. We didn't come back below. Guess what? We went higher and actually created the first leg here. 1, 2, 3, 4, 5, 6, 7, 8. Drop. Okay, so what you would have normally thought was basically an M forming here and to go down. Look what happened, right? We went above. We stayed longer than 30 minutes. We went up higher. Okay, they went up higher to grab more people. And then here you go, 1, 2, 3, 4, 5, 6, 7, 8, and then drop. All right, here's another one. First leg, second leg. We didn't have the crossover or the action happen until the beginning of the New York session, and then you drop. But these are the other type of setups, guys, that you want. Here's another one. 1, that's the first leg. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Boom, we go up. It was so big I couldn't even fit in the damn screen. But these are the type of setups that we want, guys. Okay? This is the type of setup that we want. All right? So, guys, M formation and W formations. All right? Very simple to understand, very simple to use, very powerful to use, as long as you know what to look for. Okay? Now you know what to look for. All right? Guys, I hope you enjoyed this video. part 2. There is going to be another part 3 as we continue to talk about market maker trap moves, and as we continue to break down each component so you can fully understand what it's all about. All right, guys, until the next video, have a great one.